Welcome to TheoTrade. This is Don Kaufman. Here we are. It's February 13th, 2017. Markets just closed seconds ago with the S&P futures up another 13 handles. So at this point in time, you're looking at markets right now, and there's really, in my estimation, only kind of three camps you could really live in. And that's number one, you're probably looking at the S&P futures thinking to yourself, this is it. The markets are really turning around right now. They stagnated for a period of time, but we're making the next run higher. You're also probably thinking, the economy is really starting to turn the corner. All the politics aside over here, looks like, the economy is in an upswing. That's why the Fed is probably going to raise interest rates. Anyway, you probably believe a little bit of the rally. Another group over here is in utter and complete disbelief. Now, I wouldn't necessarily put myself in that camp. I'll come to that here momentarily. But with the S&Ps now clearly and solidly above the 2,300 level, so here we are sitting at 2326. It's almost hard to say. Maybe there is a little bit of disbelief in there. But with the markets running this high, you start to get yourself into disbelief. And depending upon what your positions are, that can be an ugly position to be in, meaning if you're short markets. Now, I have short markets, and I have been short markets for quite a period of time after the election and a bit of this run-up, but there's no doubt taking some pain to the upside over here. However, I have an extremely comfortable level of delta that I'm assuming at any given point in time, meaning that, all right, I know exactly what the capability of the market is on any given day, for example, to the upside. If I look at the S&Ps and I say, well, the S&Ps right now are trading at what? 23, 26. Can they make a 100-point move up in X period of time? And the answer is sure, you can figure that out. How do you do that? Well, for the most part, you can cruise over to the SPX. One of the easiest ways to do that is to cruise over to the SPX and look at a given time frame out there. Go some 31 days out. Make it a nice round month, if you will. And you can see that a normal, or what we term expected move is sitting at about almost $62. Can the markets move up $62 in the next 31 days? Yeah, you better believe it. I mean, come on, that's the expected move. Now take that and double it. Why double it? Because that's, the unexpected out there. So markets are supposed to move, inside of that expected move approximately 68% of the time, which is roughly one standard deviation. But to incorporate 95% of all occurrences, take this number and double it. How do you like that, huh? About a 120-point move. Now, there's nothing in any of these expected moves that tell you where the market's going to go. But whatever your risk tolerance is, if you can't swallow the idea of a 120-point move up or down inside of the next 31 days, you got yourself a problem. And that's why when we start looking at markets over here, people fit in a number of, pretty simple camps. Either, hey, listen, if you're long markets right now, you're loving it. You're like, yeah, I told you the economy was going to break out. Or you're in that utter disbelief, predominantly because you'll have too much risk on. Kind of the third camp. I look at this opportunistically. I look at this as, wow, is there a little bit of disbelief that we've come this far? Absolutely, without hesitation. Looking at the markets and recognizing we're in the 2,300 level, you just shrug your shoulders as a trader and have to say, that's crazy. Again, I've been doing this a long time now, and I've seen some wild moves to the upside, but this one it definitely stands out because every single day we're bombarded by all-time highs, and to that, where's the end of it? Now, I remember thinking similar, thoughts back, in 99 and 2000. The irony is in 2000, well, that didn't end till the, March of 2000. I remember thinking of it like mid-99. So if you have that question of when is this going to end? Listen, this is, probably not going to end well for the marketplace. No question about that. It never ends well, right? But at the same time, if you're in that kind of disbelief, like of the markets rallying, you better come to terms with the capabilities of markets. And you need to take your own directional bias out of it from time to time. Sure, I'm short. You can say, oh, Don is short. I should be short. You have to be comfortable with those positions. And again, I'll digress for a moment back over to this S&P expected move and say it again, 120 point move. If you can't swallow a 120 point move in the next 31 days, okay, that's the kind of move to the upside you can have. And of course, it's easy for people to turn around and say, that's impossible, another 120 point move, okay? Yeah, so was the move from what? From 2100 to 2200, from 2200 to 2300, okay? And to put it in perspective, we've seen some wild moves to the upside, but you want to get, again, pretty technical over here. This is 3 months and, just over 200 odd S&P points. Now, again, this doesn't even include, if you looked at the S&P futures, this doesn't include, like election night where the S&P futures touched down to almost 2,000 and are now trading at 23.29. This is exactly and to the point 300 S&P points off of the election night bottom over here. And again, it's literally like to the point. Markets went limit down. I don't forget numbers like that. To the point, though, almost 300 points. So recognize which one of those camps you pretty much live in. Either you're looking at the S&Ps, you're loving it, you think we're breaking out to the upside, that's fine. Okay, camp number 2 is you're looking at this thing in disbelief, right? Just waiting for it to turn around. And the third one is you got to look at it as a little bit of opportunity. And again, if opportunity is where it's at, to me, it's the opportunity is going to be to the short side. Now, I'm not here to tell those that it's breaking out to the upside, hey, you're on the wrong side of the market. That's not for me to do, okay? You know what your risk is if you're comfortable with it. I look at this as, again, systematically one of the most wild run-ups that we've ever seen in markets in this short of time. And again, more often than not, these kind of moves do not end well. Now, moving onward and upward, one area that has been incredibly consistent, okay, lately in markets, not only has it been, if you bought anything, that's relatively consistent, but another area that's been incredibly consistent have been the expected moves. And I want to point this out once again, and I do this, constantly now on these evening videos, because I don't think enough people they're not paying enough attention. They're not trading based on these expected moves. And let me reiterate this. Okay, last week the markets expected about a 22-point move. They moved 22 points. Now, yes, it was to the upside. Okay, today I'll give you an example. All right, well, to give you this example, I'm going to go into yesterday's trading session. Now, let me be very, very careful with this. Is yesterday's trading session? Well, today happens to be a Monday. So what I did is I backed up the date over here. This happened to be to Sunday. And if you take a look, it'll actually bring you back to February 10th, which is last Friday. And you go back to last Friday. Why am I looking at this? I wanted you to see the Monday expiration. Okay, the Monday expiration. This was at the close on Friday. This was at the close on Friday, which was February 10th. It was projecting a $12.57 expected move. Now, the reason I keep going through these expected moves is, come on, I'm sorry. It only missed it by what? A few pennies? This is a product that is a $2,328 product that missed the expected move by a couple of pennies over here. And people are constantly looking for, hey, I need the latest, greatest indicator. You want an indicator? Go look at the expected move, which is available anywhere. It's just, roughly speaking, it's the at the money straddle. Okay, so the Monday options have expired. We're going to be looking at the Wednesday options. Now, the Wednesday options, listen, plus or minus about $14.60. That's what we're expecting between now and roughly Wednesday's close. Remember, you got the Yellenator up on Capitol Hill there getting grilled by Senate committee there. It's the semi-annual Fed grilling happening this week, and that's on Wednesday, but still we're only expecting less than a $15 move. And we're going to be looking at this again. Come Wednesday, I'll look once again at the expected move to reiterate our stance on that. Last but definitely not least, there was a lot of discussion today about the VIX being up. There need be no discussion. Well, the S&Ps are up and the VIX is up. Okay, that means nothing, and I'll tell you why it means nothing. There is a VIX expiration this week. So the VIX, okay, futures are going to have expiration. The VIX options expire. And what happens in this period of time, okay, is that the VIX futures, and I'm actually going to show you the VIX futures over here, and you can see I'm looking at an H7, but the VIX futures ultimately are in an arbitrage relationship with the VIX itself. Okay, I'm going to make that a little bit easier. Okay, if you're not familiar with like an arbitrage relationship, make it really easy over here. Listen, here's the volatility futures. They're trading for 14.45. See these volatility futures? They have to basically settle eventually to the VIX. So what happens in the last couple of days prior to the expiration is very often the volatility futures drop. Okay, and here's the VIX. So here's the VIX. The VIX goes up a little bit. The volatility futures drop. Why? Because they have to meet somewhere in the middle. And that's what that arbitrage relationship happens to be. There's, this little bit of inefficiency that gets taken out of the market the last few days before the expiration. So you'll see the VIX up a little bit, the volatility futures down. But don't think for a second, well, the VIX is up and the S&Ps are up. It's got to mean something. Okay, is this it? Is this the top? Listen, there's no indication over here. There's a top to the marketplace. We saw the bond market last week threaten, okay, to stop the rally by coming all the way up to the, that 154 kind of range. I talked about it. All right, so it was coming right up to this 154 range. I said if it cracks over 154, it's going to explode to the upside and the S&Ps are going to go down. How ironic. Turns around on that day and comes back off. We're still watching bonds, though, extremely carefully. All right, at this point, all engines are go to the upside. All right, whether you want to look at the S&Ps, okay, the volatility futures are off. All your volatility products, for the most part, are down, including, okay, the VVIX. With that, again, keep eyes on these expected moves. Okay, we've had some relatively slow trading sessions over here, but again, as the week picks up, there's a couple of announcements out this week. Again, Yellinator on Capitol Hill. That can always be exciting. Could still have a lot more volatility throughout the course of this week. Thanks everybody for joining us here at TheoTrade. Have a great evening. Bye-bye.